I have with me State Bank of India's MD Ashwini Tewari ji, and we are talking at the back of Global FinTech First. Since there is a lot of technology which is getting discussed here, I would want to start with YONO, which is something which SBI has been building upon for past 3 to 4 years. Already, Mr. Khara has given a comment that 100 crore per quarter is the revenue which is coming from just fee income. What else we can expect, and what are your aspirations for YONO 2.0?
So YONO 2.0 has just started. We have just onboarded the technical service provider, and in the timeline is about 18 months to 24 months roughly. But it will be in sprints, which means some things will go live, then other things go live, not all at once. So the sense is that as things progress, things will be upgraded. Experience will be upgraded, new services are going to be added. For example, one of the major things in YONO 2.0 is the marketing tech stack, which means we should be able to market as per the customer's propensity. And that's a slightly new thing going towards hyper-personalisation. And as we are able to do more of that, then the customized product which the customer might want will be possible to do. And we should therefore see much more strike rate than we see today in the vanilla products of the pre-approved personal loan which we offer to the customers, and also similar products which we offer to the customers. Today, when we do this, we pre-qualify them based on certain rules. But we do not know whether such customer will does he need or does he want that loan or not. But with the YONO 2.0, I think we should be in a position to do that. So I think many more sources of fee and other income will be available. Another major refresh which is happening is on the YONO Business, which is our corporate internet banking. Right. That's also branded YONO. But that refresh is also happening. A trade finance new solution is being taken. With all of that, I think the case for fee, because commercial corporate fee is far more. When you issue a letter of credit or a guarantee or a trade finance transaction, this is far more. So I think that is the other piece, I think, which will yield us much more revenue perhaps than what we have planned. So the future looks good, and I think 100 crores is Sir's guidance, and I'm sure that will be far more ultimately.
I just want to take a comment on this part, because technology is something where many fintechs are coming. There are various companies who are scaling up on this front. I want to understand that first, what are your thoughts on neobanks? Because this was something which was a concept which was floated by Reserve Bank of India earlier. It has not taken place. Will SBI be participating in that front in any manner?
So our general approach on fintech has been of collaboration. We do not want to, YONO 2.0 ultimately could be a digital bank, and it is supposed to have a lot of integration with fintechs. So in that sense, fintechs will be part of it, but pure neobanks without any bank at the back of it, I think so far in India that model hasn't succeeded. So we'll see these things keep evolving over time, so we do not know how this is going to evolve. But as far as we are concerned, we are already using quite a lot of fintech services in our existing setup. The KYC setup, when we take out data from the accounts, the parsed account statements, we have a fintech which is a partner. In the video KYC we have a fintech partner. So quite a lot of them we are already engaging with. But what we are also trying to do is create a proper API layer where any fintech can come and we can expose our standard APIs, and basis certain sandboxing which they might want to do, we can quickly onboard them and quickly start the work. Today, that's a very cumbersome process. So this upgrade to the API layer again is going to be a game changer for us.
Definitely. One more thing I want to understand about YONO. There were talks earlier that YONO will also facilitate smaller banks, the kind of platform which they cannot afford. Is that also under consideration?
So that's not one of the objectives at the design stage. However, as we have seen with the YONO for every Indian, which is open to anybody who is not even a customer, and they can do the pure UPI based transfers. So similar things can surely be thought about, where once we have taken care of our customers, then for other banks, and this is something we do offer already in terms of cash management. For many banks, and these are not only the smaller banks, actually many of the foreign banks who do not have the network, we already offer the services of both physical checks, cash, and also digital payments, etc. We do it for their clients. So in that sense, this is something we are already working with. On YONO, we could simply transport this to a YONO business and make this service available. But that's not the
primary
objective. At the
objective.
beginning. Yes.
Understood. Now coming to credit growth, which is something every bank is running after, and considering the phase we are in, you think that there is going to be some moderation, or what is the feel on ground you are getting?
So credit growth continues to be strong. Now it is not across all sectors. It is very strong in infrastructure, solar, now warehousing, logistics, personal loans, housing loans. These are areas which continue to be strong, education loans, auto loans. But there are also certain sectors where it is still not where we perhaps would like it to be. So my sense is that as the economy continues to improve, the left out sectors also will join the party at some stage, and therefore to that extent the GDP growth of 6 to 8%, which is the trend which is projected and also be seen, I think this should ensure that the credit growth continues to be strong. I mean, in India, if you have a credit growth between 13 to 14%, the general thumb rule is it should be double the GDP growth. So the GDP growth is about 7% or 14%, credit growth is not an outlier. So in that sense, I don't think it's a problem. I mean, of course, there was some large pickup at the just post the COVID, which was of course a pent-up demand, but that has settled down. So we don't see that kind of a exuberant growth, if you will.
So you say that the momentum may continue, but they will not be surge any further.
Yeah, surge means, I mean, we used to see 20-25% growth. That perhaps may not be the case. On an overall basis, 14 to 16% is something every bank guides for, and I think that should be sustainable.
My last question will be related to asset quality. Now, this is something which State Bank of India, being the largest bank, has improved upon quarter to quarter. 0.25% credit cost. Now, what next? You believe that there is a room for further improvement?
So I think we are in a good place now. 0.25% historically also has never been achieved. So in that sense, I think a lot of cleanup which has happened, a lot of recoveries and other cleanups, so that has resulted in this number. And the most important part is that while we are cleaning up the legacy book, the new NPAs are not happening at the pace or at the scale that they used to. So in that sense, I think we have done well. But banking is a business of taking risk, and therefore we have to continuously be on the lookout for where the next vulnerability could be, and we continuously work towards tightening those sectors, those processes, those SOPs where we might feel that there could be a risk. So it's a continuous process, but I think in general the underwriting standards, the way we select clients, the way we monitor them, all of that is improved and improving as we go forward. So it should be okay, but we are in a good place. I don't think we can ever get to a zero NP, nor do we want to.
Of course, the general aspiration cannot be 0% because in that sense, everything is hunky and dory. Thank you so much for talking to us.
Thank you.